Hello and welcome to CNBC-TV18's Mumbai Newsroom. I'm Sumaira Abdi and you're watching MF Corner. Joining in today, we have two experts. Vineet Nanda, Managing Director at Sift Capital, joins in to talk about which mutual fund schemes have been performers since the market peak in October last year. And a little later, we'll talk to Mrin Agarwal, who's a financial educator and director at FinSafe India, who's going to talk about some all-season mutual funds that you can use pretty much any time and for any goal. So first up, let me invite Vineet Nanda of Sift Capital. Hi, Vineet. Thanks very much for joining in. So, of course, since last year's peak in October, it's been quite a volatile 1 year. So which are the schemes that have done well? And this, I'm hoping we'll talk about the Flexi Cap category, because that's practically now the only category that's left where the fund manager has complete freedom to implement their strategy.
Hi, Samira. Thanks for having me over. Well, in the last 12 months, HDFC Flexi Cap, ICICI Prudential Flexi Cap, and Quant Flexi Cap. These are the three Flexi Cap funds which have done better than the peers. But we need to understand that because this is a go anywhere category, so to that extent, therefore, performances over various cycles will vary based on the relative positioning of the funds.
Okay. So what is the reason for this rotation in the list of top performers? Because not all of these mutual fund schemes were doing well in the period leading up to October of last year.
Correct. So basically, there have been three major factors responsible for this rotation. One is that as interest rates have gone up, there's been a compression of PEs, and value stocks have done much better compared to growth stocks. Second is that the small caps have underperformed in this period compared to the large and mid caps. So the small cap index is down by around 14%. Compared to the large and mid-cap index, which is down by 1 to 3%. So because of this, the funds which are more large-cap oriented, like HDFC, ICICI, which are nearly 85% large-cap oriented, have done better compared to the other fund, which had a larger exposure to small and mid-caps. And the third is that there were certain flexi-cap funds which had exposure to global stocks, especially NASDAQ-linked stocks. And NASDAQ has seen a meltdown with the index being down by 30%. So based on the relative positioning of individual funds, there's been rotation on account of these three major factors.
Okay. Vineet, what are the kinds of stocks or sectors that have propelled this outperformance since October last year?
So autos have been up by around 14%. The PSU bank index is up by nearly 17%. Utilities have done well. Commodities have done well. From an individual stock perspective, ITC, which had been somnolent for nearly 5 years, has gone up by nearly 60%. SBI, SBI, NTPC, Coal India, Bharti Airtel. So some of these value stocks have done much better during this period and has propelled the outperformance by some of the funds that have done better in this period.
So how have schemes rotated their stocks or sectors in this period since the last market peak?
So essentially, there's been a reduction in exposure to IT stocks. So post-COVID, IT stocks were at extremely high valuations. So the large cap IT was trading at like 35 Ps. The mid cap IT were at 70 plus Ps. So a lot of funds basically reduced their exposure to IT, keeping in mind not only the valuation, but also the headwinds because of the US slowdown. Second, there was an increase in the exposure to autos, which was done. Keeping in mind the depressed valuation post-COVID. There was profit booking done in commodities after the run-up, which we saw over the last 12 months. And there's been also a reduction in global exposure, which has been done by multiple funds.
If I look at this list of schemes which have done well since the market peak in October last year, It's quite an odd combination, right? You have some of the largest schemes like HDFC, iPru, but you also have relatively newer and smaller schemes. So you have Quant, Taurus, Shriram, Mahindra Manulife, JM. Is the size of the scheme a factor in performance at all? I mean, are smaller funds more agile and therefore able to better adapt to changing market conditions and therefore are performing well?
See, small size of the fund is definitely an advantage, but is not the only factor behind performance of a fund. If I were to probably list down the top 3, 4 factors, I would say that the quality of the fund manager, the research team are as important as the size of the fund. A smaller size of the fund gives greater agility for the fund to be able to rotate sectors and stocks. So clearly that is a factor across all categories, I would say, not only the flexi cap category.
Okay. And Vinay, just to wrap it up, what are the schemes that you'd recommend in the category, which are what, for investors now?
Sure. So I would say that one can continue to hold the HDFC FlexiCap fund, although the fund has seen a change in fund management. But the new fund manager, Roshi, is extremely competent and comes with great track record. We can continue to hold the Quant FlexiCap fund because this fund follows an absolute return strategy and therefore, looks at quant-based kind of investing, which helps in diversifying also your exposure to other funds which are more index based. At the same time, you'll be able to churn your portfolio to create absolute returns. And I would recommend the PGIM Flexi Cap fund. This fund has underperformed the last 12 months because of the higher exposure to IT and financial that it had. But with the correcting valuations, in my view, it's well positioned to be able to capture the growth opportunities over the medium term.
All right, Vineet, thanks very much for joining in and for taking us through this list of winners since the last market peak. We're going to take a very quick break. On the other side, another interesting chat lined up with Myrna Agarwal of FinSafe India, who's going to talk about some all-season funds. Stay tuned.